Well, a very good afternoon, everybody, once again, and welcome to the Rubicon Indicator Thursday webinar. Today is, what date is today? June the 23rd. And what we want to do is focus our attention today on the Rubicon Indicator. So as many of you know, we have two meetings every week, two webinars. One is on Tuesday, focused on the Trader's Edge Forex indicator and fundamental news. However, our time today is fully focused on the Rubicon indicator. And as many of you know that are trading it, a pretty good week with Rubicon this week. Lots of action in the markets, and essentially anytime there's action, the markets are trending even slightly, the Rubicon will just kick pants, and that's pretty much what happened this week. We'll take a look at our methodology and then some of the trades that unfolded for us this week, and again how to maximize. The idea here is how to maximize the use of the Rubicon indicator. And again, let me just say this, like all indicators out there, and there are many hundreds and hundreds of forex indicators, some of them really good. Rubicon would fit into that category. Some of them pretty awful, particularly if they're lagging indicators and they're too far behind price action. I never liked that idea. Rubicon works with price action. However, having said that, when we say Rubicon is over 80% accurate, that is actually the truth. But it also means that 20% of the time, you're going to be wrong. And that's with a really good indicator. So it then behooves us, guys, it becomes very important to make sure that when you approach trading with an indicator, and I'm talking specifically about our Rubicon indicator, you approach it in a professional manner, and that you also approach it to look for the highest probability, the highest probable trades. We take only the better setup trades, and part of our Thursday webinar here is to have continuing education for everybody, that you know how to look for those highest probability trades. And also Q&A from you guys as participants with me and members of the Rubicon community, that any questions and answers that you might have, by all means bring them here, throw them up on the board. And on Thursday it's a little bit more flexible, but you can throw the questions out there at any time, guys, as I'm going through the webinar, a little bit unlike Tuesday. Thursday, just throw them at me and I'll come back and get to them as quickly as possible. So if you got questions, by all means start typing them in there. In the meantime, I want to very quickly go back over our drill down method for any newer people. It's also good for older folks that have been with us for a while to look at this again. You can't hear this too often. The process is, guys, we want to make it to where it is completely automatic, that you have a methodology for trading, and it is so habitual that you do it without even thinking. Give you an example of that. I'm a piano player. I've been playing for 35 years. And sometimes people will say to me when they see me, "Wow, Frank, really good." And I'm thinking in my own head, yeah, if you had been doing and spending the amount of time that I have been spending playing this instrument for 35 years, you'd be pretty damn good too. So that's, more of the truth about it. It has become habitual for me as a piano player. And I take that same methodology, bring it over here to our trading, and realize that the same thing is absolutely true here. We have to make it habitual. So, being cognizant of that fact, let's run through our process one more time. I have in front of me the Euro USD. Let me go through the process. The first thing we want to do is bring it out to a daily chart. I'll clean up this, just get rid of old Fibonacci's. Squeeze the chart pretty tight to where you can see, I like to see a couple of years price action going back. And you can see it there all the way back to July of 2009. So that gives us 2 years of trading activity to look at. And you can see where I have some markings on there from before. I tend to leave my daily markings on there, and my suggestion would be that you do the same. My thinking is, if I mark something on a daily chart, any of those trend lines that you're looking at, and it then subsequently shows up on a lower time frame like a 1 hour, 30 minute, 15 or 5 minute, you really, really, really have my attention if I know that that's coming from all the way out there on the daily chart. Now, the first thing we notice on the daily chart is that our recent high back in April last month was up there at the 150 level. The euro was unable to break through that level, and it led to a 1,000 pip drop. And then when I go back in time, I notice also in December of 2009, we were back at that level, that 150 level. Again, it struggled for, oh gosh, about a month up there, unable to break it. It did peak up to 151, but came right back. So essentially, that 150 level held, and that then led to a precipitous drop of over 3,000 pips. So again, by just looking at that marker and marking that 150 level on a daily chart, I immediately get the significance and the importance of the 150 level in relation to the euro dollar. So I'll put my mark on there. I also note a couple of other things. Back here, at this level here, the 142 level. Let me just bring it to the exact number. Come on. At the 142.00 level, which is what we're looking at here. If I can ever get it down, can't get it to just work for me. Anyway, close enough for jazz right there. At that level, there also we found significant resistance and a double top here. See it here, and that also led to a significant drop of about 1,300 pips in total. So we see how important these, particularly 0-0 levels. Let me run through that. What I mean, 0-0 levels, 100, 4,100, 4,200, 4,300, 4,400, 0-0. Very important. As you go down in the time frames, the next significant number would be the 50 level. So 4150, 4250. And even below that, the quarter level, or the 4125, 4225, 4275. But always the big one, the 0-0, are extremely important. And then to take it out past that, the decade levels, the 140 level, the 150 level, the 160 level, the 130 level, all have extra impact as well. Much of that comes from a psychological perspective. But all we need to know as traders is that that is a big darn level, and we always find support and or resistance when the currency broaches those levels. Now, let's leave our 142 in there, because as it was in the case over here, in other words, as it was resistance over in 2010, November of 2010, it has become support for us here in June of 2011. So that I also noticed that. I'll leave my trend line in there. Now let's blow it out a little bit. Now remember, we're still doing analysis here on the daily chart. The next significant thing that I notice is that even though we have pulled back here, close to 1,000 pips, my spine, that red line, which we call in the Rubicon community our spine, was never breached. It stayed intact. Even the drop today, it held. It bounced off that. You can see it bouncing here and then pushing back up. So our spine held intact. And that's important to note as we go down. So in relation to the daily chart, our spine is still alive and well. And you can see actually how the spine held it all the way up that move. That was the floor or the support for that currency the entire way up to that 150 level. And as it bounced back, came to the spine, held, bounced off the spine up for another 600 pips, and then back down again. Now my final take on the daily chart is one last thing. I also note a series of lower highs coming into play. You can see it here, here, and again here. Each time significantly lower as it approached or attempted to come back and break that 150 level. Now, we can leave our daily chart alone. Any questions, guys, on that simple analysis of the daily chart? Or is everybody good with that? Okay, I'll drop down to the 1 hour. Now immediately on the 1 hour, you see the break of the spine. In today's price action, we get a very nice signal on the 1 hour. Bing, that was over a 60 pip move right there. If you just took that one signal on the 1 hour chart. And as I said, if this thing is trending, these bigger chart signals are very important. They'll give you just this one big, nice, sweet move. 60 pips right there. We came nowhere near our stop loss, which is all the way up here at 143.49. Profit 142.16. And again, it dropped another 80 pips after that. But that one simple signal, which was safe to take, 60 pips. Now, the other thing I want to do, bring it out. I'd like to see on my 1 hour chart at least 2 weeks of trading, which I see here. I then want to look at the chart, read it from left to right, and make a decision. Is that chart, that trend, or that currency trading long or short? And it's obviously trading down, as we can see from the high here all the way down to here. I now want to take a Fibonacci and draw it in the direction of that trend. I'll find my high point, bring it down, drop it on the low point right here, and now I have my fib. And the first thing I notice is that this drop here, 600 pips, pretty severe drop. Now when a currency moves, it's normal, remember its normal daily range on the euro, it's about 100, 120 pips. When a currency has a big long move like that, you will find a couple of very important things. Almost always, it will come back and test the 23% fib, and most likely the 38. And in this case, it bounced off and came all the way back up and was held by the 50% Fibonacci, which we see all the way up here. Now let me pull that out so we get more current with price action. And we see that happened yesterday. The pullback began, found a low on Thursday of last week, and it was held pretty much by that 50% fib. Now I also want you to note that we have that 40, that should be at 4200 level. Let me bring this up now. This line marker from our daily chart showing up right here. That's the 4200 level, which we know from our daily chart back a year ago was a significant player. And as we see it show up on this chart, look at this, guys. It became resistance right here, and again here, and then once it broke through, it became support right here. And then once it broke through, it attempted, the second thing I noticed is it attempted to come all the way back down to the low at 140.75, but it never broke the 141.00 level. It tried to, but didn't make it. So that showed you some weakness here today, right here. And sure enough, after that weakness, we got a bounce back off that. We also had fundamental news today where the Europeans came into some kind of an agreement with Greece. Hence, we got that bounce back, and that stopped that pretty massive drop down which started yesterday. Interesting thing fundamentally was, as this was unfolding yesterday, the Greek news was coming through. The news was good for Greece in the sense that the no confidence vote in the Greek parliament was defeated, which gave you this little spike up right here. As soon as it went through, traders around the world realized, well, that doesn't mean these guys are out of trouble. Then we had Bernanke speaking, confirming an end to QE2. Nobody's quite sure if that's real or not, but at least that was the announcement. And then boom, that was enough to drop this thing 300 pips. And again, using our I'm just giving you the background, using our indicator. There was the trade right there. We knew what the news announcements were. We knew what our overall picture was. That was a very safe